Hi everyone, my name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. I am on a mission to become the Google map for hardworking Canadians seeking financial freedom. And recently, I just find out that you could actually get paid going on vacation by the government. But how? Well, three words: staycation tax credit. Three words that sound so appealing when they are put together. We all need a little getaway, especially in the winter from time to time. And if you could get a tax credit or actually get a refundable tax credit to go to that staycation to explore our beautiful province, wouldn't that just be lovely? Before I go into details on how you can get paid to go on vacation, every week I send out an email about money saving tips and real estate tax tips, all designed to help you build your long term wealth and live life on your terms. The email takes 5 minutes to read, and over 10,000 Canadians get it. Think you'll like it. Sign up using the link below. So how do you actually get paid to go on vacation by the government? I know it must have sounded too good to be true. The Ontario government recently stated that they are offering the residents of Ontario 20% tax credit to almost 2 million Ontario families. What's the Ontario Staycation Tax Credit? Well, the Ontario Staycation Tax Credit is a personal income tax credit for eligible Ontarians, which allows them to claim 20% of qualified accommodation expenses, so hotel expenses, lodging expenses, for vacations taken between January 1st to December 31st in 2022 in Ontario. Has to be in Ontario. A maximum amount of $1,000 for an individual and $2,000 maximum for a family can be claimed. This essentially means that if you are planning a vacation, including family getaways, within the province of Ontario, you could be eligible for a refundable, remember it's refundable, tax credit under the new Ontario Staycation Tax Credit Program for the year of 2022. Simply saying, as an Ontarian, you could make a maximum saving of $200 or $400 respectively. You can apply for this tax refund credit when you file your 2022 personal tax return. Who is eligible to claim the staycation tax credit? To be eligible to claim this refundable tax credit, you must be an Ontario resident on December 31st, 2022. Sorry if you're not Ontario resident. And you must select one individual per family to claim the credit for the year of 2022. If you are an individual that does not have a spouse or common law partner or eligible child, you can claim your own eligible expenses for the credit. However, the amount available to claim is $1,000 instead of $2,000 for the family. What expenses can be claimed? Well, when claiming the Ontario Staycation Tax Credit, the Ontario government limits the accommodation expenses to a stay of less than a month. So you can only claim expenses that you incur or the vacation expense for less than a month in the province of Ontario. The short-term leisure stay can be in a hotel, in a motel, resort, lodge, bed and breakfast, cottage, or even a campground anytime between January 1st, 2022 to December 31st, 2022. The accommodations must be booked directly with the accommodation provider, such as the hotel websites, resort website, or through an online accommodation platform, such as Airbnb. So in other words, if you are booking through a friend and paying a friend the money, chances are it's not eligible for deduction. These staycation expenses cannot have been reimbursed previously to you or any of your family members, including reimbursement from the workplace. Keep in mind that the expenses must be related to a staycation for the purpose of leisure and not work or business. If you're traveling within Ontario for work purpose, you cannot claim that expense as your staycation tax credit. How do I claim this tax credit? Firstly, and most importantly, make sure you keep all your receipts. As I mentioned multiple times, in Ontario, you always have to earn your tax deduction. So make sure that you keep the receipt to earn your deduction to prove the expense. Now, the receipt has to be maintained, and a detailed receipt stating the time and HST pay must be submitted when claiming these expenses for the refundable tax credit. And the expenses must have been paid by you or a member of your family and must have been made in the year of 2022. And only one person in your family can claim the staycation tax credit. If you claim it, your husband cannot claim it. If you guys don't file the tax return together, this is always something that you have to pay attention to. Make sure that he doesn't claim it, double claim it. As long as you stay at an eligible accommodation and meet all the eligibility requirement, you can apply for this refundable tax credit as part of your 2022 personal income tax return. And at the end of the day, it's a win-win situation. You get a tax credit, and the tourism and hospitality sector of Ontario gets a benefit from your spending as well. What if I stay in the timeshare property that I own? Well, some people invest in timeshare of a resort, and they are eligible to use the property for a specific time period of the year. And on an annual basis, they are required to pay a maintenance fee to upkeep the timeshare, to continue to allow them to use a timeshare property. That expense, short-term leisure accommodation in the staycation tax credit generally does not include timeshare agreements or a stay on a boat, train, or other vehicle that can be self-propelled. So in Ontario, you can own a timeshare unit, but the cost to maintain the timeshare unit does not qualify for the staycation tax credit, even though you're still staying in Ontario. With that, that is the summary of the staycation tax credit. If you have any questions or comments, make sure that you write them down below so then I can get back to you. If you like this video and find this video useful, make sure that you share that with your friends and families. Until next time, thank you for watching.